Hello, traders. It's Melissa with Price Plan Profit. Today, I want to talk about gaps. They're one of the most powerful signals in trading and one of the easiest traps to fall into. Today, I'll break down how I trade gaps, avoid the fakes, and use them to spot high probability setups. Let's get started. First, let's define what a gap is. A gap happens when the market opens at a different price than it closed the day before. Gap ups usually signal strong buying pressure. Gap downs show fear or selling pressure. But here's the truth, not every gap is a trade. The trick is knowing when to trust it and when to avoid it. Gaps matter because they expose trader psychology. FOMO, fear, news events, earnings, all of these can cause price to jump or drop overnight. The key is not to chase. If you jump in without confirmation, you're trading emotions, not probabilities. That's how traders get smoked. So, how do I trade gaps? Very simply, I want to run Fibonacci retracement from where the gap began or the previous day's close to the next day's opening candle. After I run my Fibonacci's, I want to identify the bull channel or the 23.6 and to the 38.2 retracement level. Once I have this area identified, I then switch to a 5-minute chart, which is a chart that I use to day trade off of. Any pullback into this bullish channel is a dip buy opportunity, but I need to see confirmation that we are making higher lows inside of this channel. Once we get that pullback, I'm looking to trade the trade back to the previous high. It makes for a high probability setup. Now let's look at a gap down scenario. I'm going to do the same thing, run the Fibonacci retracement from the previous day's close to the opening candle. I'm going to then identify the bear channel between the open to the 38.2. Once I have this area identified, then I am looking for a retracement back into this channel, making lower highs with a breakdown candle and targeting where the turnaround occurred for another high probability setup. Here's another example on SPY. I encourage you, go back on your charts and the names that you like to day trade. Test this strategy out, and I am certain that you will find that it works more times than it doesn't. And in trading, no strategy is going to work 100% of the time. But when you find a strategy that works more time than it doesn't, you have identified a winning trade. Trading gaps is about discipline, not luck. Mark your levels, wait for confirmation, and protect your downside. Done right, gaps can be your edge. If you found this video helpful, hit subscribe, drop a like, and comment below with how you trade gaps. I'll see you in the next video.